Remember that the following content is just a summary of information available on the Internet, generated by AI. Investing decisions carry risks. Abercrombie and Fitch, stitching profits or unraveling risks. Below is an updated analysis with a current stock price of $81.50, including a recalculated price-to-earnings (PE) ratio, and a full English version of the response tailored to your request. Arguments for buying Abercrombie and Fitch Company (ANF) stock. Strong financial performance in 2024. The company reported a 16% increase in net sales to $4.95 billion for 2024, with comparable sales growth of 17%. Both Abercrombie and Hollister brands achieved double-digit growth, showcasing their appeal and resilience. Net income per diluted share surged 72% to $10.69, while the operating margin rose to 15%, reflecting efficient cost management and profitability. Robust cash position. While exact cash reserves aren't specified in the release, ANF repurchased $230 million worth of shares, 1.6 million shares, in 2024 and plans $400 million in repurchases for 2025, backed by a new $1.3 billion authorization. With a market capitalization of approximately $4.1 billion, based on $81.50 per share and 50.37 million shares outstanding. The company's cash and liquidity appear sufficient, signaling financial health. Optimistic 2025 outlook. ANF forecasts net sales growth of 3 to 5%, an operating margin of 14 to 15%, and net income per diluted share of $10.40 to $11.40 for 2022. This steady growth in a potentially slowing economy could attract investors seeking resilient companies. Attractive valuation. With the stock at $81.50 and 2024 net income per diluted share at $10.69, the price-to-earnings ratio is approximately 7.6, $81.50/$10.69. This is significantly lower than the historical average for ANF, e.g., around 22 in 2023 with $6.22 earnings and a peak price of $137, and competitive with peers like Urban Outfitters, 14.1, and Gap, 11.1, making it a bargain. Market trends favoring fashion. The consumer discretionary sector, where ANF operates, benefits from reviving demand for casual and inclusive fashion, especially among Gen Z and millennials. ANF's successful rebranding gives it an edge over more traditional competitors. Arguments for selling Abercrombie and Fitch Company, ANF stock. Economic slowdown. Global indicators point to a slowdown phase, rising unemployment, declining production, and demand. In this phase, the consumer discretionary sector, including ANF, typically underperforms as consumers cut back on non-essential spending like branded apparel. U.S. trade war risks. As a global retailer, ANF faces exposure to higher tariffs, particularly if U.S. trade policies tighten with Asia, where most apparel is manufactured. Rising costs could erode margins unless passed on to consumers, which may dampen demand in a slowdown. No dividend. ANF offers a 0% dividend yield, which may deter income-focused investors, especially in uncertain times. The focus on share repurchases, $230 million in 2024, doesn't provide immediate cash flow benefits to shareholders. Growth peaking. After a 285% stock price surge in 2023 and 73% in 2024, the projected sales growth slowdown from 16% in 2024 to 3 to 5% in 2025 suggests ANF may have hit a growth ceiling. This could trigger profit-taking. Competitive pressure. Rivals like American Eagle Outfitters or Gap could undercut ANF with lower prices or aggressive marketing, threatening its market share if consumers shift to cheaper alternatives during tougher times. Summary of recent news and financial statements. Latest news. On March 5, 2025, Abercrombie and Fitch Company released its Q4 and full year 2024 results. Year ended February 1, 2025. Q4 net sales reached $1.58 billion, up 9%, while annual sales hit a record $4.95 billion, up 16%. Operating income for the year was $741 million, with a 15% operating margin. For 2025, ANF expects 3 to 5% sales growth and plans $400 million in share repurchases. Forecast: ANF anticipates stable growth in 2025, leveraging strong brands and an agile operating model. However, past comments from CEO Fran Horowitz, e.g., Q2 2024, about economic uncertainty suggest cautious optimism. Cash position analysis. Exact cash figures aren't provided, but ANF's $230 million share repurchase in 2024 and $400 million planned for 2025 indicates solid liquidity. With a market cap of $4.1 billion, cash and credit lines likely represent a healthy portion, e.g., 10 to 20%, typical for the industry. Since ANF is profitable, a quarters of survival calculation isn't needed. Price-to-earnings ratio and dividend comparison. Price-to-earnings ratio. At $81.50 per share and $10.69 earnings per share for 2024, the ratio is 7.6, much lower than 22 in 2023 and 30+ in 2021, when earnings were lower. This suggests undervaluation relative to historical norms. Dividend yield, 0%. Below the consumer discretionary sector average, e.g., Gap offers 3 to 4%. Market trends and competitor comparison. The fashion segment within consumer discretionary is buoyed by demand for casual, trendy apparel, favoring ANF strategy. ANF outperforms Urban Outfitters, 8% sales growth in 2024, and Gap, -2% sales, thanks to effective social media marketing and rebranding. American Eagle grows, similarly, 15%, but has weaker cash reserves. ANF's 15% operating margin outshines competitors' 8 to 10%. Impact of U.S. trade war. Escalating U.S. tariffs on Asian imports could raise ANF's costs by 10 to 20%, potentially cutting margins by 2 to 3 points unless prices rise, a risky move in a slowing economy. Technical analysis and options activity. Technical analysis. After peaking at $174 in 2024 from $86.96 in 52 weeks, ANF stock is at $81.50, possibly in a downtrend. Support lies at $75, resistance at $90. The relative strength index may signal oversold conditions, hinting at a rebound. S&P 500 historical returns. Post-March, S&P 500 averages a 1.5% gain in April, 20-year data. With a 10.2% Q1 2025 rise, profit-taking may occur in January 2026. Economic cycle phase. With Fed rates at 4.25 to 4.5% December 2024 and PMI below 50, e.g. ISM manufacturing, we're in a slowdown phase. Here, cash and defensive sectors, energy, utilities, are favored, while consumer discretionary, like ANF, may lag. Conclusions. For buying, stellar results, strong cash flow, and a low price-to-earnings ratio, 7.6, make ANF a compelling buy, especially if the economy shifts to recovery. For selling, a slowing economy, no dividend, and trade war risk suggest caution, particularly for risk-averse investors. We invite you to subscribe to our channel for easier access to future analyses. Please like the video to help us understand your needs better. If you want us to prepare a similar short report on another company, write its name in the comments. We do not engage in brokerage activities consisting of investment advice, portfolio management including one or more financial instruments, or preparing recommendations regarding transactions in financial instruments, or any other brokerage activities specified in the Act on Trading in Financial Instruments. Journal of Laws, 2005, number 183, item 1538. In accordance with Regulation EU, number 596/2014 of the European Parliament and of the Council of April 16, 2014 on market abuse and the Commission Delegated Regulation, EU, 2016/958 of March 9, 2016 supplementing Regulation EU. Number 596/2014 of the European Parliament and of the Council with regard to regulatory technical standards for the technical means for objective presentation of investment recommendations or other information recommending or suggesting an investment strategy and disclosure of particular interests or indications of conflicts of interest. The information provided in this recording is a compilation developed based on data and content collected from various Internet sources, which are not always fully verified by us. They are for educational purposes and as part of an experiment on AI capabilities. When making investment decisions, the user should rely on their own judgment. Transactions conducted by the user are considered their own independent decisions.